Today, I want to talk about how the AMC off-exchange trading or second book trading was real all along. I want to explain how these hedge funds and market makers have been trading AMC OTC, which is over the counter or over the telephone, in private where the trades don't go through the market this entire time. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, Avi tweeted saying they said I was crazy and called me trust me bro back in 2022 for my tweet. He said I guess the cat is finally out of the bag. Back in 2022, Avi tweeted paraphrasing a senior member of staff at a bank or a big hedge fund, saying this AMC thing is a mess. We messed up big time and everyone messed up. We don't have the money to cover. Nobody does. He said there's not enough money to end this and I don't know what will happen. He said we're willing to pay the SEC $500 million to get out of this mess. As I said, that was Avi paraphrasing a conversation from a senior member of staff at a bank or a big hedge fund. And check out what article has just been released. So Reuters posted this article saying that Morgan Stanley may pay up to $1 billion to resolve a US probe into private stock sales. The article says Morgan Stanley may pay between $500 million and $1 billion to resolve a long-running US probe into how it handled private stock sales. And the bank may also agree to tighten internal controls as part of a potential settlement with the Department of Justice and the US SEC. But of course, as usual, they likely will not plead guilty to a crime and no individuals are expected to be criminally charged. The executive chairman Gorman has also vowed to stay on next year because he's in a position to help fix up on the loose ends. So it seems not only does off-exchange or off-book trading actually exist, but that it has indeed been happening, that it is also illegal, and that Morgan Stanley has just been caught doing so. Annoyingly, this doesn't mean individuals are going to prison just yet, but $500 million to $1 billion is still a significantly larger fine than we've previously seen. Obviously, Citadel was just fined a measly $7 million for misreporting short trades as longs. At least this time round, it's not just a puny $7 million, it's upwards of $1 billion. Although I do believe that more than $1 billion has been stolen from the average American retail investor or just the average worldwide retail investor, and these fines still need to be significantly larger. They need to not only be individual fines, but they need to be repaying every single penny of illicit profits that they generated. And ideally on top of that, you'd have actual people going to jail as well. And interestingly, it also seems that while the SEC has been failing us, Canada's securities regulators have actually been doing a proper job. Gavin today tweeted saying Canada's securities regulators have actually barred a hedge fund from trading. He says the hedge fund had multiple failed trades that caused $100 million in losses to 3 brokerages just last week. Now this is actually really interesting because it means a Canadian hedge fund has just been barred from trading and operating over FTDs. This is just failed trades that caused $100 million in losses just last week, something easily done in AMC by these hedge funds and market makers every single day. But it seems in Canada, these guys really know what they're doing. Not only did Canada's securities regulators bar that hedge fund from trading, the hedge fund's only manager and owner mysteriously died just a few days later. Now, obviously, I'm not ever inciting violence against hedge fund managers, market makers, or anyone anywhere at institutions, but you have to admit just how coincidental these chain of events really are. Not only did this hedge fund rack up some major FTDs, they also got banned from the securities industry just a few days later, and a few days after that, the owner disappears. Gavin also added saying that CIBC Bank was this hedge fund's prime broker, but they actually terminated their prime brokerage agreement. And interestingly, the 3 individual brokerage firms suffering those $100 million in losses actually weren't named. I wonder how long it will take or if it will ever actually happen until we see the SEC banning hedge funds from US markets. especially as Ken Griffin has previously admitted and gloated as to how he can manipulate asset prices or manipulate retail investors using artificial intelligence. The exact words coming from Ken Griffin are saying there is an understanding that how humans behave can be taken advantage of by technology.
There's an understanding that many dynamics of how humans behave can be, in a sense, taken advantage of by technology. If we know how humans behave and we can predict that, we can use that to better position our portfolios. And a number of quantitative strategies rely upon human biases and behavior to be successful. So as we understand this, look at the recent Nobel Prize in behavioral economics. As we understand this, we will use computers in new and innovative ways to better drive the pricing of assets in financial markets.
That's Ken Griffin quite literally admitting to using computers and AI to manipulate prices in the direction of his quantitative fund. Also guys, I wanted to quickly recap today's Nvidia options play from the Millionaire Mindset Trading Group. Now remember, I'm in the UK, so I posted at 9:33 market time saying if Nvidia breaks that $400 psychological level, I'd be looking at some puts. And just 2 minutes later at 9:35 AM, I called out the Nvidia 9:35 puts for the 3rd of November 2023. So at the market open, Nvidia fell below that pre-market low of day, but we waited for our confirmation and waited for Nvidia to fall below that $400 psychological round level. We then entered our puts here at 9:35 AM after that $400 break and rode them all the way down to lows of around 392 points on Nvidia, or at 9:44 AM. Looking more specifically at those 3rd of November 395 puts, you could have got in at that 9:35 AM between $6.3 and $7, and at its peak ran to $9.90 for a whopping 57% gain. I personally had a bit of slippage and entered at $6.60 and sold at $9.25 for a 40% gain. And these are the kind of trades we take every single day in the Millionaire Mindset Trading Group linked in the description below. As Cristobal also added, he said, whatever happened to the Department of Justice short seller probe where they were debating, exploring racketeering charges? The short seller probe by the Department of Justice was originally announced back in 2022, and at the time they were actually exploring implementing racketeering charges. Maybe the investigation is still ongoing and maybe they're just about to crack down on hedge funds and market makers, just like Canada's securities regulators have just done. But either way, many people agree that Sam Bankman-Fried specifically was just a puppet on the strings of a much bigger crime. Let's hear the truth tweeted saying, what if Sam Bankman-Fried was just a frontman who never really knew what he was dealing with? And this guy replied saying, now you're getting warm, saying it's amazing people have yet to figure out that Sam Bankman-Fried was just the useful idiot, saying Sam's parents are covering up for a much bigger crime. And maybe that crime is the manipulation of stocks by much larger hedge funds or market makers. And really interesting, but really unexpected and way out of left field, Unusual Wales has tweeted saying tech billionaire Peter Thiel was actually an FBI informant. It will be interesting to see over the coming weeks what Peter Thiel was actually informing on and whether it has any relevance to that short selling probe. And finally, I also wanted to explain and remind you guys of something we went through last year, and that's the difference between the FTX tokenized stocks and the AMC wrapped tokens. Now, the FTX tokenized AMC shares was the 400 million shares specifically created by FTX, supposedly being represented one for one by CM Equity with real AMC shares. But the wrapped AMC tokens, those 8 quadrillion tokens, was just some random Ethereum crypto created by a nobody with no relevance to AMC shares whatsoever. There's no evidence or documentation at all about these random wrapped Ethereum tokens being backed at all with actual real shares. I think it's important to differentiate between the 400 million shares that were supposedly backed one-to-one by FTX and these 8 quadrillion tokens of Ethereum nothingness. These 8 quadrillion tokens have no relevance to AMC whatsoever, and it makes us look less intelligent when people out there are telling you these were backed with real shares, because they weren't. They were just a random Ethereum token created by a nobody, not the real AMC FTX tokens that were supposedly backed one-to-one. I think it's important to differentiate between what's real and what's documented and factual with evidence, and what's random and made up by some nobody. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.